Welcome back to another Stock Market Open Live. Today, we are going to start by looking at Bitcoin. Take a peek at this. We've actually dropped all the way down to 65.6 for a moment. Back right now to 67.7. But usually we see a lot of buying activity here. In fact, I would say most of the buying activity since the ETF launches have occurred really in the night. So from midnight on to the AM hours, and we saw some buying activity here, but boy, nowhere near as much as we usually do. So a little bit of a push down in the evening hours here. So one to pay attention to this sort of lack of that usual buying pressure. In fact, saw a chart somewhere that the vast majority of the returns of Bitcoin over the last maybe 2-3 months since the ETFs, if not almost all of the returns, have been during the night hours. Whereas during the stock market open times, the returns on Bitcoin have basically been flat to maybe even slightly negative. Actually, I just found it here, so let me pull it up because I did think it was interesting when I saw it and worth you seeing, so that way you don't just have to listen to me, you can actually see it with your own eyes. Yeah, here we go. All right. Okay. Oh gosh, I gotta log in first. You know, drives me freaking nuts. Okay, I got in. There we go. Okay. All right. So take a look at this. Bitcoin cumulative dollar return since ETF launch. And at the bottom, it shows you during the opening hours of the New York Stock Exchange, you're basically negative. And when the stock exchange is closed, it's when you're seeing most of the returns. A lot of people are pointing out specifically around that sort of 3 a.m. time frame seems to be where we get this algorithmic buying. I thought that was very interesting. But anyway, we got some data to look at, so let's take a look at data. We've got Empire Manufacturing. Wow, negative 20.9. The expectation was negative 7. Import prices just came in. 0.3 was the expectation. We got 0.3. Ex Petroleum, we were looking for negative 0.2. We got 0.2. Import prices year over year, negative 0.8. We got negative 0.8. Export prices, oh no, more of these numbers. 0.8 versus the 0.4 we were expecting. Yikes. So again, a little bit of a higher read there than expected on the inflationary figures. And you did get a revision up as well on the export price index month over month. You just went from 0.8 in the prior read to 0.9. So a beat and a revision up on some of these numbers. Next data set will be at 7 a.m. 6:15 we'll get industrial production, but after that we'll get University of Michigan consumer sentiment. So, all right. Wow. That New York manufacturing index, that's negative 20.9. Wow. The prior was negative 2.4. The survey was negative 7. We got negative 20.9. Yikes. All right. So let's take a peek at how some of the candles are moving this morning. Let's see here. And let's go right into here. Apple is up about 37 bips. You've got, ARM's down 47 bips. Let's see, Adobe. Adobe basically had I call it a tiny miss, although I'm being generous because it was mostly a meter beat. And with a meter beat, this sucker fell 11.3%. It's insane. Absolutely insane. But what's also insane is because of that move down in Bitcoin prices, you're seeing Coinbase down 4%. Ulta Beauty beat across the board, but they slightly mentioned that there's some more competition, and so their stock's down 7.5%. The unpredictability of earnings is just insane. Nvidia is down about 16 basis points, so not much of a big deal there. And then you've got Robinhood, 44 bips. ARM's at about 30 bips to the downside now. And Tesla's positive by about 11 bips. Go into the positives. Wow, Fisker up 32% after being down 52%. So what did it go down to? It went down to 15 cents. Now it's back to 20 cents. Nuts. Petco trying to go up 4% after being down 18.5. And looks like 50 bips coming into end phase over there. All right. Let's listen in here for a moment.
And that, I think, is causing pause. Are people's baseline assumptions of ongoing disinflation, even understanding the bumps, kind of getting a bit of the front and center?
10 o'clock this morning, we get the Michigan numbers, sentiment numbers.
Yep.
That would be an interesting read on people's views of inflation and how things are going overall, because is this filtering out, and I know this is Anne Marie's area, is this filtering out into the voting public? What's the angst that we're seeing on Wall Street?
I'm pleased you brought up Mitch, because you remember when that survey came out and it actually shifted the Federal Reserve to make a move earlier than it was going to, certainly earlier than they'd communicated. I wonder, Mike, what's the focal point now? Because it feels like the goalposts have shifted a lot at the Federal Reserve, and you might disagree with that,
yeah.
But I'm going to point some out. Supercore was the big focal point. Doesn't feel like Supercore's the big focal point anymore. Mitch was enough to move the dial. Doesn't feel like it's enough to move the dial anymore. What is the big issue for them right now? What are they focused on?
Well, they're totally focused on inflation at this point. They're keeping a sort of an eye on unemployment. If it were to shoot up, that would bother them. But at this point, it's all the inflation data is what they're looking at, and they're looking at what is it that is not going down? What is causing the problem going forward? But I remember Alan Greenspan years. You're too young for that.
Yeah, by the way, you've even got chatter here that treasuries are now underestimating the risk of an actual hot headline inflation read for March. Now, we don't actually get that until, April. But still, the more you're getting traders starting to evaluate, is the bond market actually appropriately evaluating how much inflation we might have? Well, that's a little oopsies. Because you're going to end up seeing yields rise even more. Right now we're sitting at 4.28, roughly 9%. So you're quite a bit up again there on that 10-year Treasury. Tightens financial conditions again. And we had a little dip beginning in March there, but right back to that 4.3-ish level. And this is not great, mostly because at the same time as you're seeing these yields go up, you're not really actually seeing the financial conditions index, which we talked about in a video yesterday on the main channel. Again, you're not actually seeing that tighten, which you'd think the Fed would want. So a little problematic. Let's keep listening in here for a moment.
That inflation isn't decelerating as quickly as we thought, and we have pushed back the timing of the first rate cut. So we were in the May camp. We've said now that it's they're not going to cut. We still think that's on the table, but clearly, just as you've been discussing and Lisa mentioned, inflation has been more stubborn than expected, and the Fed is not in a reason. There's no reason for them to be in a hurry to cut interest rates. The labor market is still quite strong. Consumers doing well. We saw it with the retail sales data yesterday. So I think they take their time and make sure they're fully confident that inflation is going back to 2%.
There's a distinction between continual disinflation with some bumps and stubborn, sticky inflation that just isn't going down further. How do you know which we're seeing right now? Because a lot of people are saying it's just bumps bound down to the same destination, and other people are saying, hold on, this is something else. We saw a troughing out in the disinflation trend a couple of months ago, and things have really shifted.
Yeah, it's difficult, but we look at all the numbers right from the bottom up and make projections as to where they're going, and there's reason, I think, to still be optimistic. It's cautiously optimistic, but there's optimism in our view that we're still in this long-term, disinflationary channel, but there is bumpiness. And it seems, the first of the months of the year, we know there's some seasonal adjustment factor issues. They do their best, the Bureau of Labor Statistics, to smooth out these, first of the year, beginning of the year increases. But it's difficult. But we think as we go forward, rental inflation is slowing in real time. That should be reflected in the housing numbers. And we even think in the super core, there's some cooling. One category that Chairman Powell has highlighted is that core goods number. Not that's been a really great deflationary reading, but that's where it stalled a little bit. And why that's important? That could be the shock absorber or the offset for higher core service prices if we get some.
Yeah, it's an interesting point. We'll see a lot from JPOW this upcoming week. This is gonna be wild. That's just about 5 days away now. But something that I'm watching is I saw this piece here from Hartnett. He's your Bank of America's version of Morgan Stanley's Mike Wilson, and he's now calling it Goldie Shocks instead of Goldilocks. They always come up with these wild titles. I kind of love it. But let's take a peek at some of the things here. So the biggest picture. Headline/core CPI is trending to 3.6 to 4% by June when the Fed is expected to cut. Implicitly, let's see, the Fed tolerating, okay, well, this is sort of a little summary. So let's get into some of the pieces here. So this is the trend for CPI. Here's the peak that we had, and here's sort of the trajectories, I suppose, that are being evaluated. And you know what this feels like? It feels like a hurricane forecast. Yeah, the hurricane's going to go in either one of these directions. We have no idea which. Great, thanks. Anyway, Goldie Shocks. I want to see this. U.S. stocks and crypto joined by Japan and corporate bonds buzzing with euphoria on the prospects of Fed cuts equals Goldilocks. Okay. Let's see. But, basically, U.S. core CPI is trending to 3.6 to 4% by June. Emerging market central banks now pausing cuts. Okay. Quits ratio. Let's see what some of the data is he's paying attention to. Quits ratio and small business labor demand lowest since Q2 of 2020. U.S. quit rate. Well, usually the quit rate is high when you have a very strong labor market. It's easy to get a replaceable job. So you are seeing, some tightness, some loosening of the labor market here. Fewer businesses looking to increase employment, although that's still in the neighborhood of 10 to 15%. And then quits rate coming down. Okay. These are spreads on yields. What do you got over here? Record flows into crypto funds. Yeah, no kidding. That's been explosive. So let's see here. Mr. Inflows into tech funds. Follow record outflows. Tech flows. Oh yeah, look at that. Outflows over here, followed by record inflows. This is very volatile. All right. So he's just going to leave us hanging on Goldie Shocks? Just going to give us a bunch of charts? Fine, Hardnet. It's pretty boring. All right. I'll find someone else.
Going into the Federal Reserve. Said this a few times this morning, three-part story. So we'll get the statement from the Fed, you get the news conference from Chairman Powell, you get the outlook as well, the summary of economic projections. And if you speak to people on Wall Street right now, if there is a risk factor, if there's something to stay awake for, it's the prospect of getting 2 cuts on that median dot instead of 3. Lisa, that's where it's at for next week based on the economic data that we've had so far this week and so far this year.
Yeah, it's going to all be about the dots. So get out your dot plots and everyone can...
Yeah. By the way, today is the Ides of March. Imagine if the Fed meeting were today. Boy, that'd be scary. The Ides of March. The day Caesar was stabbed. So, actually, JPM has a piece on the Bank of England next week, but they don't really expect any changes for the Bank of England, so that one's actually a little boring. Where's the fun today? Investors are shifting from gold to Bitcoin. See, now, that is something a lot of folks have been talking about. Year-to-date combination of outflows from gold ETFs and surge in Bitcoin ETFs is raising questions. Why is it raising questions? Oh, the extent that it might be momentum based. Well, yeah, I mean, there's certainly momentum. All right, what do we have here? Little sign of inflation trade resurfacing. Ooh. The upside surprise in US CPI for February. Third consecutive monthly upside surprise. That's the problem. We keep getting these. Now we're at the third consecutive. In both core and headline CPI raises questions about the duration positions as well as the inflation trade more broadly. Yeah, well, that would be like investing in interest rate sensitives. Okay. They do a little calculation here. Let's see here. The overall metrics that they use suggest the market is now trading broadly neutral overall. Well, basically, as opposed to saying that they expect the disinflation narrative to continue versus not being neutral. Okay, got it. All right, that's boring. Let's see. There's the news today. What is this? Let's see if CNBC has any entertainment for us, because Doomberg was a little boring there. Oh, mind the dots. All right, old news.
Rivian is risky, but following the stock's post-fourth quarter sell-off, it likes the demand it sees for the company's new R2 SUV and is happy with Rivian's plan to delay CapEx spending. Stay tuned. You're watching Squawk Box on CNBC.
Ah, always an ad. Right away. All right. So let's see here. What do we have here? Ulta now trending towards negative 8%. Nice. Negative 8. Let's see. Nvidia down 50 bips. What is this? Tesla. Ooh, it's about to try to turn red here. You know, I closed my short yesterday, but I'm tempted to reopen either on Tesla or ARM or something. Like I want to gear up a short for the Fed meeting, either today or Monday. So we'll see here. Let's see. Oh, gosh, the Adobe slaughter is just wild. Just wild. Yeah, coin. Look at this. Coin right between these two technical levels here. You can't even make this stuff up anymore. Look at this. It just comes into the channel and bobs between the channel. Like, I didn't just put these lines here. These have been here for a while. It's crazy. Crazy. Palantir dropping about 78 bips. You know, yesterday after those Nvidia earnings, or sorry, after the Adobe earnings, I thought Nvidia was going to drop more. I was actually surprised. No, never mind. Then again, it is down 84 bips. Yeah, because yeah, it was just a few minutes ago. It was back up at like 20 bips to the negative. Now, yeah, now it's back down 0.75%. So we'll see how this expands. Kind of interesting. All right, let's see. What about CNBC's gone? The suits over here have got nothing interesting to say. You've got, boy, low set of news this morning. Okay. Home Depot commits to cities that rivals flee over crime fears. Man, I had somebody get broken into at a Home Depot parking lot. They gotta step it up, man. Don't get your tools stolen. Yeah, but it's I mean, I guess that's the place to go if you need to go steal some tools. You gotta go do some crime, and you know, people got tools in the Home Depot parking lot. Sad. Okay, fine. What is the next catalyst going forward? Let's do that, and let's pull the 5-year break-even rate as well. So I know we've got U of M at 7. We've got building permits. That's Monday or Tuesday. That's Tuesday. Housing starts. It's really the FOMC is the next catalyst. And that's on the 20th. So 5 days from today. The Ides of March. If you haven't seen it yet, the Atlanta Fed number came in yesterday. Real GDP now came in at 2.3 after that miss on retail sales. And that's still above trend. That's still pretty good. 2.3. You know, I'll take it over 2%. Well, why not? So that was interesting. I thought it was going to fall a lot more with the retail sales miss, the softening there, but it did not. Okay. And then after that, we'll get, after the FOMC meeting, the next day we'll get PMIs. Let's see. I want to see what our dates are for some of the next juicy catalysts. So GDP annualized comes out 328, along with, let's see here, PCE coming out the 29th, ISM April 1st, JOLTS April 2nd, payrolls April 5th, CPI April 10th, PPI April 11th. Wow. Next CPI report. Can't believe we're already sort of looking at it. No estimates yet for what it'll actually come in at.
I mean, I've done a pretty deep dive into Nelson Peltz's track record at previous companies. And however you feel about him and whether he should be on the Disney board, it's just not true what that video says, that he's been destructive of value in the other companies where he has been on the board. They've released figures that show that the Trian, since when Peltz or a Trian partner goes on the board to when they leave, the shares gain roughly 17% on average. And that's substantially higher than the S&P over the period since Trian was formed.
So why do you think Disney has taken this strident of an approach?
Well, I think there are a number of reasons here. First of all, I think, no company, and by the way, when I've talked to a lot of these people where he's been there, none of them were happy when Nelson showed up as a shareholder. Management wants to continue their plans. They want a board that pretty much goes along with what they have to say.
This company, I mean, Disney, it's becoming it just always feels like it's drama. It's always drama. Why is it always drama? Let's go somewhere else. All right, I like this answer. I honestly have no idea where this market is heading. Yeah, no kidding. Let's take a look at this. This guy on CNBC paper-handed during COVID. Oh, what, the guy we were just showing? That's funny. If Tesla reports in line with expectations but no guidance, what does that do for the stock in your opinion? Oh, well, it depends what the expectations are. They keep getting written down right now, so that's the question. Let's see. Another day, another dollar. Dollar somewhere. Somebody's getting a dollar. Your thoughts on Apple acquiring that Canadian AI company? Yeah, I mean, not much. I think that was a little more of their sort of, they were looking for LiDAR-based IR, or LiDAR-based AI sort of technology. Oh, look, they're talking about it right here. What happened? Why can I not hear? Bummer. It was just working. It has stopped. No problem. We'll come right back to it. But yeah, Apple will come out with some incredible AI products to pump their subscriptions. There's no doubt in my mind of that. It might just still be another 6 months.
In the cloud. Mark, it's amazing. It's somewhat
There we go.
but when it comes to
What the hell? Alright, whatever. I don't know what it is. I feel like I lost like 3 HDMI cables, just died to age this week. I will figure it out. It is no problem. It is not a problem at all. We will get to the bottom of it. Okay. In the meantime, but yeah, we actually e-hacked about that. So if you go to ehack.com, you'll see a little bit about that. And that was it was called Darwin AI. developed AI technology for visually inspecting components during the manufacturing process. Yeah. You know who could use that would be Boeing. You know, maybe Boeing can do a little cleaning up with their act, with some AI. Some automatic documentation of issues. Shorting the queues? It's tough. Maybe. Let's see here. Okay, let's go to... let's see what the queues are now. How are the queues? The queues... Yeah, I mean, you could also just find something with a higher beta to the queues if you really want to short. I mean, I guess it potentially increases your risk, but it'd be... there are definitely stocks that move more volatilely. That if the market is going to pull back, there'd be an opportunity there. Boeing's disaster. Yeah, gold-plated HDMIs. I know. I finally paid for a little bit better of an HDMI. I always usually just get the basic ones. Like, no, Kevin, just get a better one. Maybe there's actually a difference. I don't really believe that there is, but given that these darn things broke, it's sort of annoying. That's all right. We will get to the bottom of it, and then I will let you know. Higher rates and a less steep curve. Ooh. What do we have here? Let's see here. Ooh. Okay, this will be entertaining. Oh. Okay. No. There we go. Okay, this is a piece that discusses... What we have learned from recent data is that the last mile in the Fed's fight against inflation has proved harder than previously thought, while the labor market is still producing decent job gains. Yeah. And as such, we have fine-tuned our rate forecast with modestly higher rates to account for more resilient growth and stickier inflation. Our view is that the Fed starts cutting slowly in Q3, with a total of 50 basis points of easing for the year, which implies we are bearish versus the market expectations in the short run. Yeah, the market's still thinking 4. I don't think so. I think you're between 0 and 2. In our new forecast, rates are modestly higher across the curve. Expect the 10-year yield to trade around 4.2 at the end. Oh, wow. That's barely a move down in the 10-year. For the Fed, we do not think the February payroll and CPI reports were a game changer. Base case continues to be first cut arriving in July. Market pricing in 75 bips is a high hurdle. History suggests that the curve steepens into an easing cycle. However, this has been highly unusual as the Fed has taken a data-dependent approach, right? Steepening is less than prior forecasts. Mostly because of CPI. Yes. Yes, we know. Core goods? Here, that's your problem. Right there. Look at that. Ah, crap. I see you here talking about Nick T. Let's see what Nick T had to say. Is he awake? Smoke rising above the Lincoln Memorial right now? Oh, that's odd. That's very odd. Why would that be occurring? Okay. Oh, yeah, okay. Nick T threw out core PCE index probably rose 0.3%, according to forecasters who turn CPI and PPI into PCE. Yeah. Oh, Nick. 3:30 a.m. Boy, he must have been up late yesterday. All right, let's see if this functions now. Let's see here. Okay. Next up, we are going to peek at Let me see here. We're going to jump around. Let's take a look at another piece. Oh, the suits. So this is, let's try, no, that's boring. Ooh, Rabobank. Sometimes Rabo has some interesting ones. They've also been more on the bearish side, I've noticed. Oh, this just has to do with the TikTok bill. Okay, so no, nothing new here. Okay, fine. Very well. 32 minutes to the opening bell, and Empire goes off the rails again is the headline. Empire survey duly delivered, another big surprise. Negative 20.9 reading, below forecast, kind of adds to the stagflation narrative, but the significance is minimal. The good news, I guess, is that there wasn't an obvious surge in inflation pressure, but the University of Michigan report later this morning will be more relevant into a more relevant look into the state of the economy. Okay. Okay. What is next? What shorts y'all have? Who's got some good short plays? Let's talk about short plays. Oh yeah, did y'all hear about the Latin America, or the LATAM, I should say, plane, the Boeing 787 that just had this like nosedive, and you had a bunch of people sort of glued to the ceiling because the thing was nosediving, including a baby? That was crazy. Apparently, somebody put sort of maybe like a tray table of food on the pilot's lap, then accidentally pushed the button on his seat, leading the seat to push forward, leading basically the tray to push on the column for his yoke, pushing the plane down. That was crazy. Oh, it was wild. Oh, someone here says they're shorting the SPY. Ooh, juicy. That was scary. Nobody, I mean, I think 50 people got injured and 7 people ended up going to the hospital, but yeah, that was crazy. Ooh, somebody says they're shorting SMCI. SMCI. Yeah, still sitting up there at pretty high levels. So SMCI sitting at 1129. Nvidia sitting at 879. You're sort of bobbing around in this world over here. You've got, what else here? Yeah, I talked about the Nick T thing. I pointed that out. Let's see. When would you buy TMV and switch back to TMF? That's tough, you know, with the leverage bets on the rates. I don't know that. I just got rid of TMF because, you know, while I thought when we had our 6-month inflation data indicating inflation was relatively solved, we expected rates to fall relatively quickly. So did pretty much everyone. That ended up not being the case when the last 3 reports started coming in warmer. It was not good. So yeah, betting on TMF was a little bit of a harder play there. Somebody here has been holding SQQ, a call, okay, for $13 on SQQQ. Got some Under Armour shorts. Ooh. Yeah, Under Armour, you could have been shorting that for like 9 years. Oh, wow. Down 10% today. When did you open? Look at the month chart on this. Yikes. It's straight down. That's wild. All right. Ulta. Ooh, Ulta's actually worsening in the pre-market. Let's see. Coinbase 4.5. Where's our BTC? Let's see. 67.9. Also bobbing around over here. Okay. We're going to try something here. Just because it's killing me that this isn't functioning. This happens every so often. I got to figure out why. Don't really know. Just no signal coming through some of these HDMI cables. It just drives me nuts. Oh, did the SEC's website get fixed? You know, yesterday when you went to sec.gov, it just said page not found. Oh yeah, it's back up. That's crazy. It seemed like it was down for quite a while. All right, we're gonna do this really quickly. Oops. Hi. There we go. All right. Sorry, one sec. I'm just gonna restart this stupid thing, and I don't want to leave you. Press the power. There we go. I don't want to leave you hanging, so we're just gonna do it here. Replug the HDMI's. Yeah, that would do it. It's just the audio signal disappears sometimes. It's just crazy. Just like random. What happened to I never short the market from a couple years ago? Well, I changed my mind. Do you still collaborate with Millennium Money? I don't. Let's see here. Somebody here has a put for $110 on Tesla for 2025. Wow. BTC still too volatile to be considered sound money, says Steve here. Although you like buying gold and BTC. So I guess you're not being bearish on it. You're just giving a little warning. I see. Okay. Do you think Tesla will 10x after Optimus because that will be the cutting edge AI play? I think these robots are so far away. It's like 10-year play. I mean, think about how long it's taken to get FSD. You know, I first got autopilot from Tesla back in 2017. Okay, well, that was 7 years ago now. And I mean, I know it's improved, but you know, are we now at the level where it's where 7 years ago everybody was thinking, oh yeah, we're gonna be at robo taxis by mid 2025 or mid next decade? Not there yet. Probably not super close either. The progress has certainly slowed. That's not to be bearish on it. Just is what it is. Wingstop. Wingstop is so overvalued. It's crazy. It blows my mind. Absolutely blows my mind. All right. Oh, it's functioning again. Yay. So it was just a restart. See, that makes me wonder what it is. You know, if it's restarting it to get those electrical impulses going again to make it work. There we go. All right. Let's make sure you can hear me. It looks like you should be able to. That's working. That's working. And then this should work.
No, because it's not been true for a long time.
We're actually, it's not a coincidence that this week yields have run up on the back of two hotter inflation reports, and we're now at 2-month highs.
Yes, no, that's absolutely true. I just don't think it unusually. Yeah.
Somebody says, I think you need to update your Mac. I update these computers daily and restart them. I know there's not always an update every daily, but it's not the Mac. That's a Roland. Let's see. There are rumors of quantum computers potentially decrypting BTC. I'm not so worried about that, mostly because you can sort of update the underlying chain to just a stronger security technology, and stronger hashing in the future, and that would just resolve that pretty quickly, I think. So I'm not heavily worried about that. Yeah, I think this is a very good question. So where do you stand on the disinflationary trend? Is it a second wave or are we in stagflation? You know, I don't really know. I was very enthusiastic, obviously, when inflation was finally rotating down as much as it was since the summer of 2023. And it was doing fantastically. I mean, we were queuing up rate cuts, and the market was very enthusiastic about these rate cuts. Now that enthusiasm has sort of gone away because we've had 3 reports in a row that have been not great. And it's an indication, really, that, you know, we probably need a whole lot more patience for the market. Well, one thing that doesn't work really well when it comes to patience are the interest rate sensitives. It's like some people have already been patient waiting for, you know, a year or more on some of the interest rate sensitives. And it's probably going to be another year. So it's pretty wild. That, I think, is the biggest issue. Now, whether that's stagflation, then you're asking, well, how much is the economy going to grow, and how is inflation doing? So I don't know. I mean, so far it seems like the economy's still doing well. I do think the Fed's going to revise up their GDP forecast. That I do think. Put options on TQQ. Ooh, you want to short the triple Qs. Oh, no. There's a way to lose all your money in one day. Okay, maybe not one day. Steve here says, second wave inflation crew. Give a thumbs up. All right, let's listen in.
I just think the burden of proof is a little higher now for them to prove that that AI is an enhancement, not a real challenge. They're going to have to fight that battle for a while. The pricing issues maybe were more fleeting, but does seem that that right now it does have that premium valuation. Now it had used to trade at, well above this,
right,
in terms of free
multiples.
cash flow,
yeah,
multiples and things like that, because it just seems such an autopilot.
Oh, tell me about this, Tanner. Tanner says, I build houses and trades are being sent home weekly. It's about to get bad. So what's happening? Is it your builders that are running out of money? I mean, that's what we're seeing across the board, is builders running out of money and loans coming due. This is in Florida for you. I think y'all have an interesting supply problem over there. The supply is about to skyrocket. It's one of the reasons I've purposefully avoided Florida for the time being. In the long term, I'll invest in Florida. I actually like Florida, but I've been tracking Florida for a while.
Or so of the current market cap, or 10% of the current market cap, so not insignificant. All right, guys, I've been following. Sarah, you've been all over the place this week. But
oh, do I see the Fed hiking again? I think the Fed would probably be more likely to just not cut at all this year than hike again.
Perhaps the day from Emily Wilkins in D.C. in terms of where things stand in the Senate, how quickly a bill to ban TikTok in the United States there will be created. Will it be part of the appropriations bill? You look for Maria Cantwell and Mark Warner from Virginia.
Not enough new housing being built. Wow. Yeah, I think the builders are out of money, and you can't speculate on these land prices right now either. It's crazy. Somebody says, I'm a mortgage broker in Florida, and we need rates to come down. Yeah, no kidding. It's really hard to qualify now.
And you can sell it along with, by the way, the algorithm and the source code. Now, you can make your own algorithm, but you need at least some time to be able to copy the source code. And I went back 3.5 years. I found my notes finally after a bit of a search from 3.5 years ago when we were going through all this. Back then, it was about 10 million lines of code. Now I'm told it could be as much as 40 million lines of code. It could take a long time to conceivably to copy that code. That said, large language models apparently make it a bit easier and more possible. But the problem here is that while Steven Mnuchin may be interested in buying it, or perhaps there'll be some others out there that certainly might be, you're not gonna get a chance at this point to actually do so. And so we are left with the real possibility that if the Senate acts and passes the bill, and President Biden, as he said he would, signs it, and then there's some time period and there potentially is litigation nonetheless, that this actually could disappear in the United States, as hard as it seems to imagine, because what you're buying without the source code or access to the source code is virtually impossible. Obviously, you'd like the algorithm as well. Steven Mnuchin addressed this on Squawk Box yesterday when he was asked about, well, what do you do if you don't get the technology? Take a listen.
Proposals they've blocked because they were not happy about the technology transfer. And I would have to convince them and the U.S. government that there was a way to do this.
And that continues to be a key question. There's been some talk about Bobby Kotick as well, the former, of course, CEO of Activision being involved. I think the sense, frankly, that I'm hearing is, sure, if there was something to do, he was involved the last time 3.5 years ago, along with Oracle, along with Walmart, along with Microsoft, when they all sort of were thinking about what they could do here as a ban seemed potentially possible when we got that executive order from then President Trump to ban it. Not right now. I mean, there's nothing seemingly, Mnuchin may be out there and may be able to raise some money around it, but you got to actually have a deal that you can do. And so we'll keep a close eye on the Senate.
Yeah, the Senate. I don't know if that's going to go anywhere anytime soon. I was thinking about doing a video on the TikTok bill, sort of what's in it. It's not actually that long. I don't know if people are interested in that. Sometimes I try to just get my mind a little bit off the Fed and the stock market. Like yesterday, I think I did a pretty detailed Boeing video that I thought was really interesting. I mean, I usually make these videos because I'm personally just very curious and interested in what's going on. And what a freaking disaster over there at Boeing. But yeah, check that video out if you haven't yet. Anyway, here's a note. Rates markets are at a hawkish tipping point. Traders have been consistently clear for most of this cycle that the Fed rate rises will eventually be met with swift cuts to stabilize the economy. However, we might not be getting the swift cuts. And traders are beginning to get uneasy about sticky inflation. Sticky might not be the problem. There are multiple signs that inflation will actually just start rising again. And it's not just a U.S. trend. Globally, there are signs that the disinflation trend is ending. The market may well get impatient and move rate expectations higher if the Fed does not move the dots higher next week, sensing a policy mistake. Oh, they're going to move the... That's very interesting. They're basically saying if the Fed doesn't move the dots up, the market will do it for them. Okay? Well, I think the Fed is going to move the dots up, but that's an interesting argument as to why they might. And if inflation keeps rising, then this latest episode where the market out-hawks the Fed might not be so brief. Oh, that's pretty bearish. Oh, everyone's getting a little bearish all of a sudden. Well, I mean, the market's still in like greed and euphoria, but I guess the writers and the researchers are getting a little bearish all of a sudden. All right, let's keep listening. Reddit IPO? I don't know. I always worry about path to profitability on some of these companies, but you know, I see so many money losing companies and their stocks just skyrocket. I'm like, I don't understand. It blows my mind. Yeah, let's see. They're going to commercial, so we'll go here. Let's see here. Drop the dots. Do you see the Treasury going back to 5% yield? Well, it really, yeah, the trend won't be higher once the unemployment starts to show face. Well, and that's the thing is, while there's unemployment maybe that you're seeing in your industry and construction and the trades, you know, it's being absorbed by healthcare, immigration, the government sector, retail, and hospitality. They're all absorbing a lot of these losses that you're seeing in the other categories. So you could actually just have theoretically a recession in construction and not anywhere else, which is wild. Yeah, I that is interesting, William. I haven't seen it that far, but secret kill switch to control Truth Social Rumble right before the election, per Alex Jones. Oh dear. Well, I'll read the bill. I maybe I shouldn't be so skeptical, but when I hear Alex Jones, I do get a little skeptical. I'm not saying he's wrong, but what I'll do is I'll read the TikTok bill and I'll go into it with a clean mind and I'll put some thought into that and I'll make a video because I do think that is very interesting. That the way the wording was probably crafted is probably a little overly broad, as it usually is. It's all about the government trying to get itself more power. That's not uncommon. Oh no. Boeing whistleblower? Wait. Oh no. A family friend. Oh, it keeps going. It turns out Barnett was telling close friends not to believe it if he supposedly committed suicide. After family friend Jennifer asked Barnett if he was concerned for his safety, the former quality manager was empathetic. Aren't you scared? He said, no, I ain't scared, but if anything happens to me, it's not suicide. Wow. Wow. Yeah, that's an interesting update from one of the close. I mean, we all kind of already knew that, but wow. Scary. Scary. Aye, aye, aye. All right, somebody's saying AMD. What's going on with AMD? AMDizzle. AMDizzle. Well, it's come down quite a chunk from its 200 there, huh? It's down like 185 now. So that's 7%. Elon has a take on the TikTok bill. What? It doesn't surprise me. That's all right. He also has a take on Don Lemon. Oh, gosh, that was some drama. You know, Don Lemon's video comes out Monday. You know, I want to watch it. Why is Elf not getting dragged down by Ulta? Well, because Elf is Ulta's problem. That, you know, they implied Elf was increasing competition for them and a problem. So of course Elf isn't going down. They're the reason Ulta is going down. They are the reason. What about shorting gold? Ooh, I don't know, man. That sucker's been trading sideways for so long, and it's sort of like you trade some of these currencies. They move so little; it's kind of boring. Let's see here. Somebody said, "What do I think about the Tyson Jake Paul fight?" Oh, how old is Mike Tyson again now these days? I don't know. It just seems like a little mismatched here. 57. I mean, I'm not saying he's not a strong guy, but 57 versus what? I think Jake's like 27. It's like a 30-year difference. 30-year. There's a whole 30-year mortgage between the two. Jake Paul is 27. Wow. Yeah. All right. Netflix is gonna stream it. Tyson. I'm not saying Tyson's not an animal. I'm not saying that at all. Definitely still strong. You mentioned that an ETF can give you tax savings. Can you structure it so that stock gains aren't passed along to holders, but you pass stock losses on? Yes. I actually just did that in my ETF. We did, you know, some trimming, and this is just educational. This is not a pitch on any ETF. It's just educational on the function of this. But basically, you can do a tax trade where you trade something you have a profit in for a cash fund, like a cash ETF. Like a treasury ETF or whatever. So you could literally tax trade from a stock you have gains in to cash. That's freaking insane. Okay, then if you have losses on a certain stock, you could just sell those right away. And then you pass on the losses, but not the gains. You could also offset them, obviously, but why not accrue losses when you have them and not pay taxes on the gains when you have those? You know, if you could do that. So yeah, there are some really, really, really cool tax efficiencies of the ETF world. I think we need Oprah. We need Oprah. You get an ETF. You get an ETF. You get an ETF. I think it's really cool. Anyway, all right. So what do we got? Who's here?
Maybe the market was sniffing out that that's going to happen. I think it's generational. I don't think it's going to be one of those quick trades.
Yeah, and some ETFs can't have options within them, so keep that in mind.
The top 10 stocks is such a big percentage of the market cap of the S&P 500. You've gone into a years of relative decline of the mega cap.
Tony, just because you just threw out the recession word and expect one, where do you see it? First of all, it's not in the market, so I think you have to defend it a little bit. It's not in the economic data as well, certainly not consensus. So where do you see signs of recession?
Well, it's been wrong. And again, Sarah, that's why I brought in the idea of why hasn't it happened when it's happened every other time. The capital markets shut down, the bank lending shut down, the money supply went negative for the first time in history. There had to be a source of capital for companies to have access to money when you couldn't get it anywhere else. And for the first time in history, we have private credit bigger than the high yield market, bigger than the levered loan market, at 1.7 to 1.8 trillion. So why do I think we're going to get it now? Number one, we've been in a recession in the manufacturing sector. What most people don't know, Sarah, is that there's something called the initiation survey rate. We had 176,000 job reduction in the estimate in the last 2 months at the latest payroll data. Prior to the pandemic, if I reached out to CNBC and said, how many people are you hiring? How many people are you firing? Historically, 70% of companies would respond quickly enough to put it in the initial number. It's called the initiation survey rate. Post-pandemic, that's dropped to 40. In January of this year, according to the BLS, it was 27%. So we have widely incomplete data. The vast majority of the time in the last year, it's been negatively revised. I mean, how many people like me came on TV a month ago and said the Fed may not even cut rates because employment was up 335,000 jobs, only to be revised significantly lower. So I think it's going to come from a weaker employment picture. The longer that the Fed stays higher, the higher for longer, the steeper the debt cliff comes when it's time to roll it over.
All right, Tony, we got to leave it there. Have a great week.
That's an interesting little warning there, basically saying the debt bubble gets even worse as you get closer to the Fed actually finally deciding, okay, it's time to end these high rates. But the longer you keep rates high, the more the debt bubble is worsening. Somebody here's asking about exchange funds, the 7 years. Yeah, there's an option to do that. I don't think it's as ideal as the ETF world, but it's much more accessible. The ETF world is extremely expensive. So I think Tesla's going to have to test the 100. No shortage of reasons to get that low. Where are the earnings going to come from? We'll see. Yeah, EPS this year is going to be the big number, right? So if EPS is $2, that's the problem. News out that a failed $1 billion hedge fund spread trade on Masterworks gone wrong, caused BTC to crash. Oh, really? Yeah, I think funds are definitely screwing around with BTC, and it's leading to a lot of this volatility. Let me see if I can get crypto news. Yeah, I don't see where you see that, but that is very interesting. Oh. Bitcoin hedge fund. Oh, there it is. 31 minutes ago. Bitcoin crash triggered by failed $1 billion hedge fund spread trade. One company can pull it from 72 to 65,000? That sucks. So this is a rumor. This is speculation. Apparently a fund blew out $1 billion on the MSTR BTC spread trade today. Oh, this is somebody's opinion. MicroStrategy, notable leverage play on Bitcoin. Bloody, bloody, bloody. Trade gone wrong. A fund blew up on their, on essentially a short they had. They set up a trade on the ETF approval. Long Bitcoin, short Masterworks. Not Masterworks, MicroStrategy. I don't know why I keep Masterworks. Oh, who remembers them? They're still around. The idea behind it was that MicroStrategy will fall while the ETF rises. I mean, it's not a horrible idea because the idea of MicroStrategy was that it was kind of like an ETF without having an ETF. It was basically just a corporate shell that held Bitcoin. Okay. But MicroStrategy ended up outperforming Bitcoin. Right. So they had to basically close it all. Yeah, that makes sense. Okay. Yeah, MicroStrategy has done very well. Look at this. It's like explosive. French bully is being a bully. You've got Indian government has finally agreed to slash import tariffs on electric cars from multinationals that build plants in India. Huge win for companies like Tesla. Yeah. Well, where are you going to build the plants? So is it going to be Mexico? Is it going to be Indonesia? Is it going to be India? Do we even need more plants right now? That's what's really interesting. Thus, I think is very interesting. Nvidia, by the way, down now 1.3%. It's really selling off here in the pre-market right before. Look at this. You're really getting a pre-market move down. Q's now down 0.5%. Ulta Beauty's now down 9%. Oh, Tesla just
lost the lead.
Yeah, that just turned negative, although it's bobbing around that 0 level. Wow, Adobe dropped even more. Oh, this market open's going to be really interesting. Enphase just dropped too, another 1.2%. And there's Embraer, up again. Okay. Well, this is going to be fun. Wow, even Amazon's. Oh, wow, look at Amazon dump into the open. Everything's just dumping into the open here. Okay. There's some delicioso pre-market selling here. What's Bitcoin doing? Bitcoin doesn't give a flying hoot. Alright. Volatility index still negative. Although that usually takes like 15 minutes to really update. And even Costco's negative. You know it must be bad if Costco's negative. That thing never goes negative. It did after earnings. Alright. Let's get to the bell. Oh, there's still a commercial. Oh, losers. Any moment now, they'll be back. What else? Trump prosecutor Willis can stay on if Wade goes. Oh, man. Every day it's something. Goldman CEO says he's optimistic about 2024. Okay, well, your researchers aren't. Bro, where are they for the bell? What is this? The bell is like coming up here. Get to the bell, CNBC. What is this crap? You got 10 seconds to go for the bell.
Opening bell is brought to you by Nuveen, a
Hurry
leader
up.
in income, alternatives, and responsible investing.
They're censoring the bell. Ding, 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 ding.
Headquarters and a real-time experience back there. Here at the big board, Madison Square Garden Entertainment, celebrating the NCAA men's basketball tournament. Big East tournament begins at the NASDAQ Pernod.
Well, they screwed that up a little bit. Jeez Lord, but that was like 90% red right there. So let's see here. You've got NVIDIA. It actually showed a green candlestick here. I'm surprised. Look at that. 0.99. Somewhere bobbing around here. Oh, AMD's getting a green candlestick as well. MicroStrategy, fat red right here. Oh, let's see the moves here. This is gonna be interesting. Ooh, Adobe. Oh, Adobe goes deeper red. Oh, Tesla goes green by 86, 90 bips now. I had a feeling there was gonna be a bounce at Tesla this morning. That's why I covered the short yesterday. And you know, if this runs like 2% or whatever, perfect time to reopen the short. But anyway, look at that, down almost 13% here on Adobe. Wolf still going down. I thought Wolf would have done a little flip-flop this morning as well. After being down 19% or 18% yesterday, I thought it would have gone green. But I don't think there's real momentum over here for that. Enphase, can't figure out directionally which way to go. Palantir, another 2%. You know, it was down 2% yesterday, and now it's down another 2% right at the open. Wow. NVIDIA's now down 1.5%, with Supermicro down 2.5%, ARM's down 1.5%. Rivian, for some reason, is trying to go up. Wonder if there was any, well, I mean, Tesla's going up too, but I wonder if there was any Rivian news. Let's see. Rivian. Let's see here. Rivian. No, there's really no Rivian news. And I don't think there's Tesla news either. Yeah, that'd be funny. Elon sees the video of someone shorting and then he issues a buyback. That's a good one. I don't think they have enough money to do that. So, you know, people who say Tesla has a whole lot of cash, they don't know how to read a balance sheet. People literally just read the cash line and they don't read the bills payable line and the potential that you have negative free cash flow, which then starts eating your cash. So whatever. So what else here? Nvidia is stuck around 1.3 down. AMD is stuck around the midpoint here. The Qs are really going down. That's what's interesting right now. Yeah, it wouldn't be surprised me to get about a 2% bump there on Tesla today. It's at about 1.5 right now. But Ulta is trying to recover. You've got, trying to get a little recovery there on Adobe. So it's not as bad as the pre-market was indicating there right before the bell. You do have Apple, coming down 1% here after yesterday. It was one of the few that was actually green yesterday. Google, Coinbase, Coinbase bouncing up as well. Let's see here. Robinhood goes down 2.5%. It's had a little bit of a rally. And look at it, it's 17.55. Some nice moves there. All right. So what else here? Yeah, Robinhood's trying to trend down even more here. CrowdStrike down 2.25. They're in a great place, though. 325 on their stock. Boy, I remember that sucker being a whole lot cheaper. So Intuit's even down 80 basis points. There's Micro down about 6%. Yeah. Okay. All right. Interesting. Let's see what they're saying here, and then I'm going to go see what the suits are saying.
Now it's back up into 23.
I guess he bears the scars.
I think he probably just says what a lot of CEOs
Alex.
think, which is we don't want you betting against our company.
Sure, that's fair.
We're a great American company.
Yeah. Distraction more than anything else. Just deliver, unless lies are being spread, in which case you need to combat it.
10-year just ticked up again. You're now sitting at 4.31 on the 10-year. It's not up that much. It's only up like 1.2, but it's not negative, right? So it's certainly moving up. Yep, it's getting tougher out there.
That came in a little bit short of what Wall Street was expecting, and there were high hopes for this stock. It was already outperforming about 16% year to date so far. Look, they're warning of slower growth ahead from the CEO, Dave Kimball. He said in 2024, the category will remain healthy, but the growth will moderate to the mid-single-digit range, barring any major economic event. So investors are really used to strong growth from this company, and the analysts are stepping out and defending it this morning. Simeon Siegel, for instance, of BMO, says that he thinks the guidance will prove conservative, and that they will continue to outperform. One thing to look at, everyone looks at on this one, is the ticket versus the average selling price. Tickets were down. The average ticket was down for the fourth quarter in a row, but average selling prices did partially offset that. The price increases are still happening. They're still benefiting. They're contributing less than they have been in previous.
This is all about Ulta, so good job, Sarah. But look at this, Wingstop. It's finally starting to trend down. I'm so grateful to see this. It makes me want to short it. I don't think it's going to be volatile enough, but, your red candlestick here was because of a dividend. But if that just started a downtrend over here, that's going to be one I want to pay attention to. I think there's some dollars to pick up there on the way down. Yeah. Blink charging. Some people were YOLOing into this one, and I really would not. It's not, to me, it's not a fundamental investment to invest in any charging company other than Tesla, from a charging point of view. And I'm even nervous about Tesla in the short term, right? But I don't know. Anytime I've done an analysis on Blink, I've been heavily, heavily disappointed. All right, BTC 68, Nvidia's holding at about 1.2. It's really sideways trading here. Wonder how the day's gonna go. Where's the movement? What are you gonna trade? Where's the fun? ARM down 1%. I'm waiting for ARM to sell a little more. Oh, Rivian, 5%. Short it. They probably are going to have to raise money again within the next year. Tesla now below 1%. This is a very scary place that it's in. On a technical basis, complete disaster at Tesla. I think, you know, your next stop, you're hoping you get a bounce here in the 145 to 150 range, 142-ish, right around there. Just sort of depends where you have your trend here. But you're just hoping. You have some good support for Apple at 169, potential buy point there. You've got Target 41 basis points. Now look at that. Target's trying to get down to 159 support. Look at that perfect reject right there on 174. Has it been there? Yeah, it's been there before. Look at that. Ding, ding, ding. Oh, what a surprise. Ding again. You know, the basic TA just ain't that hard. I'm not saying I'm like a TA god, but in my opinion, the most reliable TA is the most common, because that's why it's self-fulfilling, is because so many people are looking at the same lines. It's not hard to draw. Amazon going down a little bit. You know, I wouldn't mind buying Amazon if I could get some discount over here on Amazon, but I don't know when you're gonna get a catalyst where this sucker actually goes down more. 12% on Blink. Honest. And they still exist. Let's look at them on the month. Oh, wow. Yikes. Okay. Costco down 42 bips. Wingstop. That's on the month chart. It's wild. It's already starting to stabilize. How boring. Wow. Enphase down 2.5%. Yikes. Oh, Embraer just went down 1%. Rip. Coinbase down 1.7. Apple's almost down a whole 1. Tesla is up a clean 1, but it's struggling around that 1. Yeah, things aren't really like moving mega here. I mean, the Qs keep bleeding. That is what's happening. I'm just watching the Qs bleed. Every time I look back, it's the Qs that are a little worse. All right.
The administration would essentially come out against the deal, if you want to call it that, and President Biden did more or less that, with comments about saying that he wants U.S. steel to remain in domestic hands. What is that going to mean for the future of the deal, of course, has been a key question for many, and that continues to be a question.
Oh, this is about the Nipomo steel deal. Boring. All right, let's see if this breaks everything again. If I flip this around, probably everything's just gonna break again.
To stay in cash and get paid while you wait and while you try to figure out where the opportunities are. What's interesting about this point right now is that there's this huge debate over whether or not we are in a position of late cycle euphoria, meaning people are engaging in...
Oh, chip stocks are rallying, by the way, all of a sudden. AMD just went positive 0.5%, and NVIDIA's only down 40 bips.
Hinged, but perhaps not all that supported. Or are we in a mid-cycle expansion phase, meaning that the economy continues to grow, we have a long ways to go before the business cycle is over, and that debate, you could make the case for either side pretty easily. You could find the data to make the case for either side. I am on the side that I think we are more late-cycle euphoria, and this late cycle portion could last a very long time and already has lasted a very long time. But that doesn't mean that just because it's lasted a long time that we have gone back to be early or mid-cycle.
If we are in this stage of late cycle euphoria, Liz, does that mean the hope for trades like value, which by some measures is its cheapest in 20 years, that small caps tumbling 2% yesterday continues to underperform large caps, that trade can't really take place? Because usually you need that economic upswing to really get into those names that are more cyclical and are cheaper.
Well, you're seeing some appetite for those names. You've seen industrial stocks do really, really well. You've seen energy stocks start to come off the mat. You've seen materials come off the mat. I think that's more due to the fact that inflation has surprised to the upside. But you are seeing some of those cyclical names catch a bid. The small cap piece is what continues to perplex me and what continues to worry me, because you do want small caps to confirm the move upward in the broader market. Small caps employ 50 to 60% of the American economy, and they are more financed by debt. So if small caps can't quite get up above that certain line that they've been trying to get.
Well, that's the thing about the small caps is, you know, as rates stay higher for longer, the mega caps have way more of an advantage because they're benefiting off the higher rates. Smalls get, you know, reamed. The Qs continue to bleed. You know, you've got some volatility here in some of the underlying, but the Qs just keep going down. You're almost down a whole percent on the Qs. Yeah, you know, TQQ continues to look like a... I mean, you'd think it might be a slower move, but if just the trend in the Qs is just slowly down, who knows? Maybe a short on the Qs is the way to go. Keep listening.
An earlier mid-cycle behavior.
If we are, again, in a late cycle, more euphoric type stage, Liz, and it's extended, that makes it quite difficult to try to hedge yourself, because the idea is that it is extended. It can go on for some period, so hedges end up not paying off. What we've seen is that the right tail has become the new left tail. Folks are more willing to hedge upside risk than they are downside risk.
Yeah, that is so euphoric. There was an article on that yesterday where funds are talking about upside hedging, and I'm like, no. You're going back to the end of 2021. No.
A high percentage is a good way to hedge it.
Upside hedging is like getting a call option, right?
I know that sounds like such a snore, but you look at treasuries, particularly on the short end of the curve. If we are approaching, and perhaps it's getting further out, but at some point we are approaching the first Fed cut, the short end of that treasury curve has to come down when that becomes closer into view. So you do want to hedge with some of those things. I think classic defensives are also important to have a position in. So things like utilities and staples, not to mention when rates do finally come down, you probably want to own stocks that will pay a healthy dividend, which is consumer staples, utilities, even some energy stocks. So I think you can look at those as a hedge. And the last thing I would say is, if we are in fact late cycle, and if there
No, chicken dinner. I said shorting TQQQ is a good way to lose your money quickly, because that's triple leveraged, right? And so you get these massive swings so quickly, and sometimes it's unrecoverable. But Qs themselves, you know, if you're gonna have a slow bleed, maybe that's not as you know, like the opportunity for the Qs at this point to really rapidly run, you know, without triple leverage, I feel like is less risky than being on a triple leveraged fund. So that's it. It's just the difference on the triple leveraged. So let's see here. AMD still wants to stay green. AMD's holding green. Bitcoin's holding at the 68 level. By the way, almost a percent down on the Qs. By the way, remember, I generally wouldn't say invest in QQQ if you really want exposure to the Nazis. Invest in QQQM if you're not familiar with that yet. It's basically the same thing, except it has way lower fees. Its expense ratio is I think, what is it, 0.15 versus 0.2, so you get a little bit of a discount. So maybe not way lower, but it's not 25% lower. That's not bad. Tesla's getting some red candles here. I'm not actually, I mean, today a little boring so far. I'm seeing a lot of this sideways trading. I'd like to see some more entertainment. A lot of plus and minus 1%. Where's the real entertainment? Blink to the downside. That's entertaining. Amazon keeps bleeding. Look at that. That's probably helping drag down the Qs. Affirm. There's an interesting potential short. I mean, this thing ran up like crazy. Look at its bleed. Ran up to $52, just bleeding straight down. Someone says Tesla puts about to print. Is that true? Is it trending down? Oh, yeah. It's like right at the open, you get some buy the dippers, and then, sorry. Bye. All right. Let's see. What does the C and Besizzles have for us? NVIDIA's... It's all a mess. That's what it all is. It's all a mess.
Environment, but in fact, in reality, what they're telling, according to Griffin, allies is, okay, just continue with coal. Because natural gas is a lot
listen,
cleaner.
what you will hear oftentimes is price on carbon is really the most effective way to actually mitigate. And until we get that, we're going to be dealing with a lot of different things that don't necessarily get to the source of the problem.
I mean, hasn't Powell resisted this idea that the Fed should somehow also be a little bit of a carbon cop, you know, when it comes to banks?
Well, of course he has, because frankly, that's, as his phrase is, not my job. But then again, it kind of shouldn't be. He's got other things to worry about. It should be Congress's responsibility to focus on, you know, climate initiatives. That way it can be debated. That way there can be balance. That way you can have a negotiation. Whereas if you just have one person coming in, all right, we're doing this, you know, that's like a dictatorship. Tesla's barely holding on to the screen. I did think we were going to get a bounce today. I thought it would actually hold. But right now the bounce is barely holding on. I mean, even if you're flat, you got theta decay to deal with. I thought I was going to be down 10% off the... Like, I would have lost about 10% holding the put for another day. Mostly because I thought it would have been up a little bit and then the theta decay. So I thought, okay, I'll take my tendies yesterday, which is great. You know, 50% in a day. That was awesome. I want to do that again. But wow, look at this. You might actually... Look at that. You're trending down again. You might actually end up going right into the close. I mean, we'll see. It is Friday. So, and keep in mind, this is the Friday before the JPOW meeting. Super Micro's got about 3 on it. So, rates, markets reach hawkish tipping. Yeah, we read that. Huh. Yeah. Good old market. What is this? Fed seen sticking with 3 rate cuts despite higher inflation? Really? Who's this according to? I can't imagine that. I mean, I guess that's always a possibility, that they don't adjust the dots. But a recent pickup in inflation isn't likely to change the forecast for 3 cuts. Fed will keep rates steady. This meeting, yep, we know that. A solid majority of survey respondents see Fed officials penciling in 3 or more rate cuts. Oh, these are survey respondents. This is sort of just what the market thinks right now. Well, if that's what the market thinks, then we're certainly going to see an increase in the bubbles. Let's see here. Who is this? Anna Wong, U.S. chief economist. We are expecting the dot plot to continue to show the median participant expects 75 basis points of cuts this year. I don't know about that. I really don't think that'll be the case at all. Survey of 49 economists. Yeah, y'all are wrong. Y'all are wrong. Wrong. You don't know wrong until it's going to bite you. I don't know. Well, what does everybody here think? Here, let's run a quick poll. It'll be entertaining. So, let's see here. Go here. And then we'll run a quick poll. So, while I pull this poll up, we're about to announce our venue location for the event June 21st to 23rd, which means you want to make sure you get your ticket because the price will go up once we announce more information. So, anyway, what will the Fed do next week? Okay, so we're going to go with project 3 cuts. Project 3 cuts 2024. Project 3, let's see, 4 or more cuts 2024. Ooh, okay. I feel like we've run this poll before. Project 2 cuts. Project 0 to 1 cuts. I think we ran a poll like this before already, but we'll just do it again right now. Just want to see where everybody is. All right, I just plugged it in. Go ahead and vote. Go vote. NASDAQ Doodles still down 1%. Ulta's trying to rotate back up. Rotate. V1. Tesla back up to 42 bips. This is boring. Not a lot of movement today. Coin, how does coin go positive after that drop this morning? It was down like 4 or 5% in the pre-market. Wow. Microsoft's down 1.3. Good job, Coinbase. Dang. And BTC is trying to recover. So maybe that's a contributor. All right, let's see what the votes say. So, quickly get your vote in. I'll give it another maybe 15 seconds here. Today's the Ides of March, by the way. If I hadn't already mentioned that. The Ides of March. All right. Let's take those poll results. Okay. Here we go. And end poll. All right. It says 2 cuts, 41%. 0 to 1 cut, 35% of y'all. Wow, so most of y'all are between 0 to 2. I mean, if I add that together, that's 76% of you think we're going to get 0 to 2 cuts. 3 or more, or sorry, 3 cuts, 18%, only 18%. And then 4% think 4 or more. 2 cuts because of an election year? Yeah, that's a good point. There's always that election bias. Always. Always. Wow, Nvidia is almost positive. Holy smokes. Well, remember, Nvidia is also not interest rate sensitive. ARM's positive. Tesla's negative.
Lost the lead.
Adobe. Wow. Apple. Crazy. DWAC. You know, DWAC's been straight down since right around Super Tuesday. Let's go to the day chart here. It's a little more. Well, maybe, I guess that's not really straight down. Correct yourself. SPY's down 60 bips. All right. What does Sarah have to say?
The company may stand to benefit if TikTok does indeed get banned. Our Kate Rooney joins us to explain. What are they doing here, Kate?
Hey, Sarah. Yeah, so Amazon might not be the first name that comes to mind around social media shopping, but after a partnership blitz last year, Amazon is now embedded in the biggest social apps. A lot of this happened within 6 months last year. Amazon teamed up with Pinterest in April of 2023, then Facebook, Instagram, and Snapchat all in November. The agreements put Amazon products into social feeds and then lets users link Amazon accounts to then make purchases. This is for both core Amazon products and some of the third-party sellers out there. And then amid those deals last year, the e-commerce giant was also taking a page from Instagram and TikTok for its own mobile app. It launched Inspire in 2023. So this lives within the Amazon app. It looks a lot like Reels. And these are actually Amazon products. So they're being promoted by influencers. They've been partnering with content creators since 2017. And part of this, guys, is defensive. So scrolling and shopping, as you guys were talking about with Ulta and TikTok, it's a bigger slice of e-commerce.
Man, content creators are so annoying.
Out on Insider Intelligence estimates social e-commerce will grow into $100 billion market next year, up from $67 billion last year. Younger generations are driving it. A quarter of social shoppers are between 25 and 34. That's according to eMarketer. Instagram tends to bring the most purchasing power. TikTok, though, not far behind. It's pretty much tied with YouTube. I talked to Mark Mahaney over at Evercore about the potential impact on Amazon if TikTok does get banned. He told me, quote, to the extent TikTok is taken off the table, it could be an incremental positive and means more opportunity for Amazon because of some of these shopping partnerships. Mahaney points out that the social strategy is driving both sales and advertising.
Yeah, I've seen that on Amazon. I was joking in the office. I was on Amazon, and I'm like, I want to hit buy, but for some reason the button's glitched, and my finger like barely, I guess, misses buy, and then it just goes to some girl in a bikini. I'm like, my gosh, like, I guess it knows if you're a guy user. What can they do to get you to stay on the Amazon app more? Oh, no. That's it. Now I gotta delete the Amazon app too. Delete everything. Delete everything. In the meantime, you've got Tesla now a little more poopsie doopsie than we even had a few minutes ago. Adobe also, though, the trend down here continues. So anyway, it's time for another cup of coffee, so I'm gonna press the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Yeah. Oh, we do have the Michigan survey in 2 minutes. I guess I could stay for that really quick. Y'all want to see the Michigan survey together? All right, we got the music out of the way then. I'll pull it up. So we've got We'll do it. So 90 seconds to go. So everybody who already X'd out, that's their loss. The evil laugh. So U of M. U of M. U of M. U of M. Okay, 1 minute to go. Now, something that, I mean, I don't really know that how much it really matters as a catalyst, U of M, but, you know, we'll cover it. It won't hurt to look at it and see what's going on. So we are about 50 seconds away from it. The inflation expectation figure is also pretty volatile, but I guess I'd be nervous. I mean, like, if it came out with some big revision to the upside, which I suppose wouldn't be horribly surprising given how inflation has been moving. So there's always that possibility. But I guess we'll find out. So every Friday do a longer open or duo stream. I'll think about it. All right, we're about 10 seconds away from the data. All right. And the Michigan survey. 1 year inflation expectations come in actually a little lower than expected at 3.0 versus the 3.1 expected. That keeps you flat with the prior 3.0 read. So really no movement. The 5 to 10 year didn't really have a movement. However, you did have University of Michigan sentiment that came in lower than expected, 76.5, with current conditions coming in a smidgen lower as well at 79.4 versus 79.7. I don't know that El Marquette really cares. Yeah, there's really no movement here. It's just still getting a little bit of that selling pressure. So kind of a steady, what's it called there? Pizza Party Fridays? Man, I love pizza. All kinds of pizza, too. I don't even care who you are, what kind of... we can even call bruschetta in Italy my pizza. It's all great. Bread, tomatoes, you know, cheese, olive oil. I don't care. Anyway, we'll see you all soon. Thanks so much. Goodbye.